Today on Trading Nation, we go small. We look at the small cap stock sector. Dennis Davitt with Harvest Volatility Management. Jonathan Krinsky with MKM Partners, your guest. Jonathan, first you in the charts. Russell 2000 or the small cap 600, your choice. Chart it and tell us where you think the small caps are going to go.
Yeah, so there's two different issues here, Brian. One is the very short term, right? So we're up 10 days in a row on the Russell 2000. We're about 7% above the 50-day moving average. So the case could certainly be made that we're due for some pause or pullback here. That can happen through a price pullback or just through a time sideways consolidation. So that's probably the call for the next, say, 1 to 2 weeks. But if we're looking at the bigger picture, there's a couple things investors should keep an eye on if you're looking out for 6 to 12 months. The first, this Monday we saw 25% of the small caps make a 52-week high. Going back to 1995, that's the highest reading for one-day 52-week highs we've ever seen. So that type of breadth expansion tells us it's very broad-based and robust. That tends to continue momentum going forward. The second is that we're basically flat on the last 2 to 2.5 years for the Russell. That included a 26% drawdown from June of 2015 to February of this year. So we've just gone through a bear market, and I think that's important for investors to recognize that we're just now starting to emerge after seeing that bear market. And then the third point is really probably the most important. It's how are the small caps performing relative to the large caps? And they've been underperformers for the last 3 years, and it's just now starting to break that trend. So we think over the next 6 to 12 months, small caps probably move higher, and they probably outperform the large caps as well.
All right, Dennis Davitt, do you agree with Jonathan's technical view? Small caps will outperform in the next half year?
Well, I agree with Jonathan's technical views. They should outperform in the next year. One of the things that's interesting to me, if you take one thing out of the segment, 2 words is, I always like to say, chess masters. Like the quant funds that were in the Russell stocks, the small cap stocks, they woke up, I guess, after the election and said 17% of their revenues come from outside of the U.S. So 17% of the revenues outside of the U.S. in a Trump election, we need to change our model, so we need to reallocate more to the Russell. That's why we've seen this massive move in the Russell. So once everybody gets flat, back to rebalance, then we'll go forward. In the short term right now, there's a lot of people getting tapped on the shoulder, being forced to cover positions, which have moved massively against them in a very short time.
Dennis and Jonathan with a look at these small cap stocks. Thank you both very much. And a reminder, folks, we do 2 additional segments online every day, but you got to go online to tradingnation.cnbc.com.
Just as it's dangerous to try and catch a knife falling to the floor, it's risky to buy a stock selling off. But don't buy just because it's quote-unquote on sale. We've all seen that item in the store that's marked down 10%, and 3 weeks later it's marked down 25% or more. Purchasing these so-called sale items early on can put a dent in your trading account.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.